In the stock market, there is a reason that software companies trade at a premium. These are products with really high gross margins, very little marginal costs of onboarding additional users, but also they're incredibly sticky and incredibly useful. Just think about in your own life, how many software subscriptions do you have now, particularly if you're an entrepreneur or businessman or work in a sort of corporate white collar job? How many software subscriptions do you have now compared to say 5 or 10 years ago? This is a massively growing industry. If you take a look at some of the best performing stocks in the US market over the past couple of decades, you will see a common theme. A lot of them are software companies. Take a look at what would have happened if you had invested early in companies like Adobe, ServiceNow, Intuit. These software conglomerates have done really, really well. Now, the company that I'm about to talk is a mini software conglomerate, and they've got sustained growth, but the share price has come down a lot. And I just don't think the reasons why the share price have come down are compelling enough to be a bear. The company I'm talking about is Atlassian. With Atlassian, you are in a team. You are in a team. Basically, their mission is to unleash the power of every team. So Atlassian is a really nice balance where it's not some really old stalwarty company that's got a huge market cap, because it's still growing very nicely. I mean, they've got 21.3% 3-year forecasted annualized turnover, and their long run goal is above 20% per year. That's at least what they're trying to do until 2027. But also, they're not a tiny little company. They're not a company that could be stamped out immediately, because they got $4 billion a year in revenue, $2 billion a year of that revenue they're pumping into R&D, and there's a really nice balance there. They're not tiny, they're not huge. They're the 10th fastest growing company in the Nasdaq 100, and their position in the Nasdaq 100 is very much cemented. They're very likely to fall out of the bottom of that index, and they're very likely to just keep on steady, boring, compound, solid growth. In short, it's a collaboration tool. So you would use Atlassian to manage a whole host of different projects, collaborate. These kinds of tools have done really, really well because they've been catalyzed by the pandemic. Work from home is a trend that's very much here to stay. I just don't think we're ever going to get back to 2019 levels in terms of work from home. And when you're all working remotely, it's incredibly useful to have everything tracked online. And the more complex our projects get, particularly when they're remote and they require a lot of different websites and a lot of different functionalities all working together, Atlassian stands to benefit from that. Now, something interesting about Atlassian is their flagship product, Jira. A lot of what that does actually integrates with the DevOps industry. So when I was speaking to software developers about this, you've got companies like GitLab and GitHub, which you think about, they're like smart Microsoft Word for writing code. And of course, like, software is a massively growing industry, right? Think about all of the software products that you use today. Think about how many you used 5 years ago. I can almost guarantee you, both in your business life and your personal life, you subscribe to more software products today than you did 5 to 10 years ago. So obviously you use DevOps to write that software, things like GitLab and GitHub, and Atlassian have got their own flagship product for that as well. It's called Bitbucket. But where Atlassian really stands out is they've got this deep-rooted sort of collaboration software on the DevOps industry. So almost every developer that even uses GitLab or GitHub, they also use Atlassian. So you've got this massively growing DevOps industry that Atlassian has got a piece of. Now, that's not all that they do. They have collaboration tools across the whole sphere. And what's also interesting about Atlassian is they've got this other segment of their revenue called Marketplace. And what Marketplace allows people who use the software to do is to actually build their own. So it's a platform as a service. So people can go on there, they can build software that links in with Atlassian's existing product, sell that software to third-party users on Atlassian, and Atlassian would take about 20% cut, which is an amazing business model because it obviously benefits the people writing the software. It also benefits the company that they are working for because they can build and customize the software exactly how they want, and it benefits Atlassian because they take a 20% cut, and they're very much within that ecosystem. Now, this is what I wanted to say about this kind of software, is that they have really good economics. You know, whilst Atlassian may not have the potential to become $1 trillion company, whilst they may not be solving self-driving cars, or they're not absolutely at the forefront of AI technology, they do have a very, very sticky, powerful platform, which is necessary as more and more workers move online and as more and more workers work together remotely on more and more complex projects, and they've got exposure to the really fast-growing DevOps industry. Now, that being said, one thing that's interesting about Atlassian is they do spend a huge amount of their revenue on R&D. So yeah, whilst they're, maybe not the most superior AI company in the world, they are reinvesting a huge amount. So if you have a look at this is their most recent quarter. For the most recent quarter, it was 54% of revenue spent on R&D for the quarter. And when you look at it for the 9 months, it's 56%. So they're really using that money to keep improving their platform. And the nice thing is that their sales and marketing is only 21% of revenue. So I think because Atlassian have such an existing customer base compared to their competitors, it allows them to spend less on sales and marketing, more on R&D, and then make their products better and better. And if you want to talk about pure plays instead of the project management and collaboration segment of Atlassian's business, these are the main pure plays: Monday, Smartsheet, and Asana. And what you can see is if you look at the far right column on here, look at the R&D, right? Atlassian, they're a much larger company. They've got much larger revenue to play with, but also because they've got that existing customer base, they're spending less on sales and marketing, more on R&D. And I mean, look at that compared to Monday, over 10 times the amount on R&D. And it's a similar story for Smartsheet and Asana. So they're able to improve their platform at a much more exponential rate than what these other software companies do. And another thing that you'll notice here is you've got this column that says 3-year forecast turnover, 3-year percent change as a percentage of 3-year turnover. What that is showing is it's showing the percentage of 3-year forecasted turnover that has come from the last 3 years annualized turnover. So 71.3 is 21.3 for the forecast of Atlassian over 29.9. That's at 71.3%. The other three, they're a bit lower at 42, 47, and 33. So what that's showing is Atlassian's turnover is not slowing down. And if you consider they're adding about $1 billion a year to their turnover, and Asana is even smaller than that, this is showing that Atlassian are just really grabbing this project management sector of the market. And because they've got this land, because they've got this marketplace focusing heavily on customization, I just think they'll really be able to keep going within that segment, and they'll be able to gain market share over their competition. As I mentioned earlier, I really like Atlassian's exposure to the DevOps industry as well, because you really want to be investing in whatever the backbone is behind software, because software, as I've said, it's just becoming more and more ingrained in everyone's lives as time goes on. Now, what's really interesting is obviously with Atlassian, you get indirect exposure to DevOps. They do have Bitbucket. It's not the market leader. It's more those collaboration tools that go with the core development operation platforms. Now, here you can see Atlassian versus GitLab. Again, GitLab is a pure play on DevOps. Atlassian obviously do other things as well. Now, GitLab is doing very well. They've got 26% 3-year forecast annualized turnover, not nearly as sticky. And whilst I don't think Atlassian will be able to disrupt GitLab anytime soon, I think the chance of GitLab disrupting Atlassian sticky software when they're much smaller and they've only got 200 million a year on R&D, I just don't think that GitLab really have the scale to do that. Now, what I'd be more concerned about, particularly if I was looking at GitLab, because GitLab is a nice potential investment. The problem is that GitLab are just competing with Microsoft once through GitHub. They're also a larger company that were acquired by Microsoft, and Microsoft can integrate that AI in to help developers write better code. And you've also got Azure DevOps, which is a solution that obviously a link to Microsoft's cloud platform that's also growing incredibly quickly. So this is clearly a sector that is very hot right now. The big tech are getting into it, and I think Atlassian is a safer way to get exposure to it than GitLab at the moment. As much as I do like GitLab as a pure play, I just think that the risk of them being disrupted by Microsoft is much higher than Atlassian's risk of being disrupted by Microsoft. You can really see that the big tech are investing in this industry as well, because I noticed that if you look at Alphabet as a fund, they bought 7.1 million more shares of GitLab. So Google's parent company Alphabet, they own a lot of GitLab. So they're clearly trying to get exposure or controlling interest in this sector as well. Now, as I said, one key thing that I really like about Atlassian is their stickiness of turnover growth. I feel like coming out of the sort of big 2021 spending spree, we've seen a lot of wheat separated from a lot of chaff, meaning companies have stripped back on the solutions that they don't really need, and they're continuing to spend on the solutions that they really do need. And of all of the companies out there, Atlassian is one that's proving to be very sticky. Of course, your turnover percentage change generally slows down as you grow, because it's just harder to grow at the same rate, right? But if you look at Atlassian's growth rates, they reported 30, which was actually artificially high for the last quarter, and they're forecasted to grow 23% year on year for Q4 of 2024. If you look at the whole year of 2023, they grew 26. So to go from 26 to 23 is really not too much of a slowdown, particularly compared to, well, I mean, if you look at GitLab, right, that went from the 50s to the 20s, and most of those other smaller pure plays in project management software that I just mentioned, they're having much bigger slowdowns than Atlassian too. So this begs the question, why Atlassian? Why is it representing really good risk rewards right now? Take a look at the share price again. You can see that it's fallen quite a bit. There's a lot of resistance around the 115 mark, a lot of really long-term resistance, but it's trading pretty low considering that the growth has been very, very consistent. This may be partially because Wall Street are really in an AI craze, and whilst Atlassian has got a lot of interesting AI stuff going on, particularly with that high R&D number, they are not one of these top 10 Palantir, Nvidia-esque AI companies, so it may be partially that. But all of a sudden, the stock seems to be trading at really, really good value. If you look at these multiples, here is their price to free cash flow. You can see it's currently trading at 32, which is basically the lowest it's traded since 2018. Despite showing that it can grow, it's a much larger company than what it was in 2018. And those growth rates have really continued to hold. They've not fallen below 20. And compared to most of the market, those growth rates have been really, really sticky. Here's another thing to consider as well, right? So as I mentioned, R&D is very, very high as a percentage of revenue. If you just take the most recent quarter, and if you say, oh, actually, because I think this is what Wall Street is being bugged by, it's like Atlassian is not optimized for net profit yet. So if you take the R&D and say, right, this R&D, instead of it being nuts, it's going to be 25% of revenue. Now that's very, very reasonable for a company that's at the lower end of the NASDAQ 100 in like a 20 to 50 billion market cap range. 25% of revenue is very reasonable for R&D. So the R&D, that would make the R&D 297 million on the quarter. The current R&D is 576. So you would have 279 million more, and then the new net profit would have been that 13 million where they just broke even, plus the 279 million, and that makes 292 million of net profit. Now, when you annualize it, that's 1.168 billion, and on a market cap of 42 billion, you've only got a 36 PE. And quite honestly, a 36 PE, it just ain't that bad, because if they can keep growing that revenue by 20%, next year, a 36 PE, if their share price doesn't grow, will be a 29 PE. And then if it grows 20% revenue again and the share price doesn't move, then it's going to be a 23 PE. And then all of a sudden, it just starts to look extremely cheap, particularly if they optimize their net margins even further. Atlassian are just not in that stage yet. And I think Wall Street, with these kind of companies, they just need to be a little bit more patient and say, look, 80% plus gross margins. Of course, Atlassian could be more net optimized if they wanted to. It's just that they're being very, very aggressive at making sure they can seize these like extra opportunities. And I think it's no coincidence. It's the same with Workday. Workday has high R&D as a percentage of revenue. And I think it's no coincidence. These companies, they're spending a lot on R&D, and their turnover growth rates have remained very, very sticky. Interestingly, investing YouTuber Brian Stoffel, who I'm very fond of, hi, Brian. He had been a long-term investor at Atlassian since 2018. Him and Brian Feroldi on Brian Feroldi's channel used to make videos about Atlassian all the time. And then last month he came out with a video saying, actually, Atlassian, I've ditched you, which I thought was quite interesting because a couple of weeks before that, I could see Atlassian's share price going down, and I was starting to rub my hands and saying, this is a really good value software company. So let's listen to Brian and see why he sold it.
Company number 2 that I recently sold out of is Atlassian, which has work collaboration tools, particularly in the tech industry. Now, I first bought this stock about 6 years ago, and it has returned 200% since then. Not a huge market beater, but it has outperformed. Now, why am I selling Atlassian? Number one is competition between GitLab, Asana, Monday.com. I know they don't all overlap perfectly with what Atlassian offers, but the competition is fierce in this realm. And one of the problems I have is I have difficulty knowing how strong the moat is because a lot of these other companies offer up statistics regularly like dollar-based net retention. And that lets me see, one, if the company is holding on to its existing customer base, and two, how much more they're getting those existing customers to upgrade or add seats over time. Again, Atlassian is a perfectly fine business, but since I'm narrowing down my list of names, I want that level of granularity to be able to tell whether or not this should make the cut into a more select group of stocks. So that's why Atlassian left.
Again, I really understand his logic. It's kind of consistent with a lot of what the bears of the Seeking Alpha articles are saying, plus value. But I would say that the value on Atlassian is really good, and we'll go through that in a minute. But yeah, I think his reasons are valid. So firstly, the competition part, actually, that's the bit that I don't necessarily agree with. I understand GitLab is kind of competition with Atlassian a little bit. I don't think that Bitbucket is it's going to be the most amazing solution ever, particularly with Microsoft once, with GitHub and Microsoft twice, with Azure attacking that segment of it. But for the actual project management, I actually think that GitLab's growth is a good sign for Atlassian because, as I said, I spoke to many developers and they said, yeah, Atlassian are actually doing really, really well in that sort of collaboration and management of developing operations together. Now, when he talks about the lack of statistical data, the lack of things like net dollar retention rate, customer account specific softwares, I completely and utterly agree with Brian here. And he raises a very, very good point. Yeah, I'm just looking at their revenue breakdowns now, and they're breaking it down into cloud, data center, server, and marketplace and services. Now, it's good to see the marketplace and services, but cloud, data center, and server, it doesn't really tell me anything. All it tells me, if the cloud segment is growing really fast, is it tells me that customers are migrating to cloud. It doesn't tell me how fast their DevOps sector is growing. It doesn't tell me how their like flagship just project management tools are growing. It doesn't tell me any of that. And that is one of the risks that you have when you're investing in Atlassian, is I completely and utterly agree. I don't really know what their CFO is doing, but they do not have the most transparent breakdowns. I really want to see, how much does Jira make as a percentage of revenue? Are all the different softwares, the big ones, growing at 20%, or are some growing at 30, some growing at 10? That's what we really want from Atlassian. Like, sure, it's great the customers are migrating to cloud, but I knew that anyway. You can just look at what's happening with Azure or AWS in Microsoft and Amazon segment results, and you can find that out. So that doesn't tell me much, and I completely and utterly understand his criticism there. It's just a question of overall, with the turnover and the free cash flow that's filed and audited and going to the SEC, that is what it is. And if you can look over that sort of, opaque level of financial results, also on the earnings calls, the founders, they don't talk for very long. They sort of end up and go straight to questions. So I completely understand that if this investment is not for some people because of lack of transparency. Also, I don't really know what Atlassian would be trying to hide. If this was like some deep value play from a software company that had gone from 25% turnover growth to 8% turnover growth, and they hadn't had a long history as a public company, that would sway me a little bit. But obviously looking at the long term, looking at the consistency of turnover growth, and also look at their turnover surprise, the fact that they keep beating on the top line is really, really positive to me. And if other investors are overlooking this like segment breakdown, even though it's not ideal, I think that that's going to help investors that are comfortable investing in Atlassian get in at a slightly better price. I also really like to look at Morningstar's research, and they have like a bulls say and a bears say. Morningstar are rating Atlassian 4 stars right now, but let's just go to their bears say section. What they're saying is they always make 3 points, and I always like to look at these points carefully because it summarizes the bear thesis. They say Atlassian has traded at lofty valuations at times. Whilst it might continue to generate some growth, the company may not live up to optimistic assumptions. Sure, I understand that. Atlassian has been overvalued for most of its time as a public company. I'm arguing, and I'll demonstrate the valuation in a minute, that it's showing some of the best risk rewards that it has been since it sort of went public, or at least since 2018. Number 2, despite generating billions of dollars of revenue, the company is not generating positive GAAP. Yeah, I don't care. If you're an investor that likes GAAP, fair enough. I don't care about GAAP. The cloud transition aspect makes the company, So their third point is valid because, well, okay, sure, they're having to shift people over to cloud, which it seems like they're doing fine and sustaining their growth rates. But if they're sort of making a covert neg in there, I understand, because it is a bit annoying to not see exactly where their revenue is coming from. It's great that their marketplace and services revenue is there. We can see that's growing at 13%, but it's not a big portion of their overall revenue. And that would be really, really useful to see. So Atlassian CFO, if you're watching this, please take some notes and please give us some more coverage. If you want to increase your share price, I think that that's really going to help people have more comfort investing in you. You can just give us transparency, because what are you hiding? Your turnover is really, really good. Your products are very useful. Your products have got good reviews. You just need to give us a bit more color so that we can really understand exactly where the growth in the business is coming from. And whilst I think it's a decent investment, it may stop me and other investors from investing the full amount that they would if they didn't have, Jira's growing 20%, Bitbucket's growing 20%, Trello's growing at 20%, etc., etc. So yeah, looking at this valuation, here's a base case DCF that I built. Again, it's forecasting the turnover growth sort of slowing from that 23 all the way down to 16 over the next 10 years. You've got 28% free cash flow margins, which is basically around what they're doing at the moment. So my assumption is they can sustain that. And at a 9% discount rate, it's showing a present value of 210. And for a stable conglomerate to get 30% upside on this kind of DCF in this market, that's pretty cheap. I'm not saying it's stupidly cheap. Atlassian is probably to the point where, it can't be mispriced by Wall Street by a factor of 2, because it's a $42 billion company in the NASDAQ 100. They're just not going to be at that point, but it is showing good value compared to what I'm seeing in most of the market, particularly given their sustained growth rates. Looking at it on enterprise value to gross profit, you're getting a current ratio of 11.76. And again, just go and check the other software conglomerates in the market right now. It's very, very difficult to get this kind of ratio on a relatively large software conglomerate that is posting 20% plus CAGR. Like if you have a look at, for example, ServiceNow, that again, it's like a similar kind of company. You can award it a bit more of a premium because it's larger, etc., etc. They're trading for 21 times gross profit. I'm not saying Atlassian should be trading for 21, but maybe like 15 or 16 is the right ratio. 11 is just a bit too low compared to their peers, particularly because they're proving on the sort of collaborative tool side that they're much stickier than all of their peers, like Monday and Asana. And on the GitLab side, they've got exposure to that industry for at least most of what they do on the DevOps. They're not direct competitors with GitLab, but that's a really big greenfield industry that I think generative AI is going to bring a huge amount of catalyst to. And Atlassian, they stand to be a secondary beneficiary of that. And what's more, taking a look at the share price, the shares are very low right now, but I just don't think that the negatives for the stock are particularly strong. It just seems like it's this kind of company that Wall Street has forgotten about it. Okay, maybe it is a bit boring, but they're doing very, very well in all of their core themes. Really good, steady, sustained growth. And in what is quite a hot market now, there seems to be pretty good value in Atlassian shares. Not financial advice, just my 2 cents. I hope you guys enjoyed the video.